Most traders aren't losing to the market. They're losing to themselves. This video breaks down the mental game of trading. Let's begin. Emotions aren't evil. They're signals. Let's start with a harsh truth. You can't fix emotional problems with technical solutions. Most traders stack indicators, optimize strategies, and journal obsessively yet still blow up during volatility. Why? Because the problem isn't the system. It's how your mind reacts when money is at risk. The first principle of Tendler's framework is simple, but it rewires everything. Emotions are not your enemy, they're data. That frustration after missing an entry? It's a signal. The fear before clicking buy? A signal. The sudden urge to double your position? Still, just a signal. But what most traders do is treat these moments like threats. They suppress, ignore, or white-knuckle their way through. That might work once or twice. But over time, those signals pile up and eventually explode into tilt, hesitation, or revenge trades. Tendler flips the script. He treats your emotions the way a sniper treats wind direction, not as something to eliminate, but something to account for, adjust around, and work with. This is the heart of the mental game approach. Instead of fighting emotions, we build a system to understand them. Because if you can recognize what your emotions are trying to tell you, you can interrupt the self-sabotage before it turns into a losing trade. Take greed, for example. It's not just about wanting more money. Tendler shows it often masks overconfidence, FOMO, or even lack of confidence. Fear? It usually hides a need for certainty, a perfectionist streak, or fear of failure. So labeling yourself as emotional or undisciplined is not only useless, it's a lazy diagnosis. The smarter move is to trace the signal. Ask, where did this come from? What's the pattern? What does it lead to in my execution? This is why the first major tool in Tendler's method is mapping your emotional pattern. We'll go deep on that in segment 2. But for now, you need to understand this. Every consistent trading mistake you make has a psychological fingerprint. Your job is to learn it. And this isn't about being zen. Tendler doesn't care if you feel calm. He cares whether your decisions reflect clarity under stress. You can be furious and still execute flawlessly if you know how to read the signal before it spikes. But when you don't, you misinterpret data. You overtrade. You underrisk. You enter late. You exit early. You panic. And then you blame the market. When the real battle was internal the whole time. This segment is about flipping that lens. From blaming emotion to tracking it. From trying to stay calm to building systems that hold even when you're not. Because here's the bottom line. Mental errors leave no chart pattern. But they leave a pattern in you if you know how to look. In the next part, we'll break down why white-knuckling it with discipline doesn't work, and how Tendler's mental system gives you a durable edge most traders never develop. What emotion consistently leads to your worst trades? Write down the last time it happened and how it felt in the moment. Now, why you need a mental system, not just willpower. Most traders think they have a discipline problem, but what they actually have is a systems problem. They believe that with enough willpower, they'll eventually outgrow hesitation, tilt, overtrading. But they won't, because the brain doesn't respond to brute force, it responds to structure. In the mental game of trading, Jared Tendler makes this brutally clear. You can't outperform your psychology. No matter how many courses you take, no matter how many backtests you run, no matter how much you want to win, when real money's on the line, your deeper emotional habits take over. And unless you've mapped them, challenged them, and replaced them with something stronger, you will default to the same mistakes over and over again. Tendler says it flat out. You don't rise to the level of your strategy. You fall to the level of your mental game. That's why the solution isn't motivational hype or positive thinking. It's a system. Why systems is bigger than willpower? Think about how you manage risk. You probably have defined stop losses, position sizes, and risk-reward ratios. That's a system. Now compare that to how you manage greed, or fear, or revenge after a loss. Do you have a defined process for those? Or do you just hope you stay composed? That's the gap. Tendler's system is made up of 3 key steps. Map your pattern, identify your mental mistakes and how they escalate. Find the root, uncover the belief or bias behind the emotion. Correct the problem, build real-time tools to disrupt it as it happens. In other words, awareness, understanding, intervention. That's how real mental toughness is built. Not by suppressing emotion, but by coding your response to it in advance. Why most traders stay stuck? Most traders have no mental model for their psychology. They blame emotions but don't investigate them. They repeat bad behavior but don't trace the cause. They obsess over entries and exits while ignoring the one variable in every trade: themselves. And when things go wrong, they default to willpower. They promise to be more disciplined. They swear they won't chase again. They say, "I just need to be more patient." But Tendler shows that these promises are hollow because they're not backed by a system. Without one, you'll repeat the same mental mistake. Not 10 times, not 50 times, but hundreds of times over your career. You'll build scar tissue, not skill. What a real mental system looks like. In Tendler's framework, every emotional mistake has a pattern. Let's say you revenge trade after a loss. That's not just lack of control. There's a buildup. Trigger, frustration, rationalization. I'll make it back. Overtrade, tilt. Your job is to document this. Give each stage a number from 1 to 10. And when you hit stage 6, you already know what comes next. That's a system. You don't have to guess. You just have to follow it like a risk protocol, but for your mind. Tendler also has you write scripts. Phrases that inject logic the moment emotion appears. Things like, "A setup missed is not a setup lost." "One loss doesn't justify doubling the size." "Confidence is earned through process, not outcome." These statements seem simple, but when used in real time, they interrupt the old loop. They give your brain a new path to follow. That's the difference between trying to stay calm and training yourself to act with clarity even when you're not. Willpower is a short-term tool. It can help you survive a few bad trades, but it can't build consistency. Only a system can do that. One that turns your emotions into signals and your reactions into habits. In the next section, we'll introduce the inchworm model, Tendler's powerful framework for how traders grow and how most sabotage their growth without realizing it. Now, the inchworm model and the A-game to C-game scan. Every trader wants to be consistent. However, consistency is not built from peak performance. It is built by reducing your worst performance. That is the heart of Jared Tendler's inchworm model. It shows how traders really improve over time, not by stretching the front of their skill curve, but by pulling up the back. Picture an inchworm moving forward. The front reaches out, then the back catches up. If the back never moves, the worm just gets longer and slower. That is what happens when traders focus only on their A game. Your A game is your best self. You are focused, disciplined, and patient. You see the chart clearly and execute it without hesitation. Your B game is solid but inconsistent. You make minor mistakes. You hesitate a little. You still function, but not at peak. Your C game is where everything breaks down. You chase. You freeze. You double size. You trade out of boredom or revenge. Most traders spend their careers chasing the A game. They study more. They tweak strategies. They hope to unlock flow states. But they ignore the C game. They pretend it is not part of them. So when stress hits, they collapse right into it. The inchworm model says this clearly. You will never grow unless you reduce your worst. The back of the worm must come forward. Tendler's solution is to create an ABC scan. You list out your thoughts, behaviors, and emotional patterns in each zone. This gives you a real-time tool to assess your mental state. For example, A game. Calm, confident, clear plan. Wait for confirmation. B game. Slight tension, early entries, overchecking positions. C game. Fear, tilt, random trades, no plan, chasing. You run this scan daily. You track how often you shift between these states. You log what causes the change. This is not journaling for the sake of journaling. This is data collection. It shows you the structure of your performance curve, and it highlights exactly where the breakdown happens. Here is the key insight. You do not need to eliminate your C game. You need to know it. Understand what triggers it. Reduce how often it shows up, and interrupt it faster when it does. Tendler is clear. The goal is not perfection. The goal is a tighter, more stable performance range. Smaller swings. Fewer meltdowns. More control. This is what elite consistency looks like. Not exciting. Not flashy. But professional. The inchworm model becomes your internal GPS. It tells you where you are and what you need to work on today, not someday. Today. This is how you stop being a random trader and start being a deliberate one. In the next segment, we begin step 1 of Tendler's system, mapping your pattern. We will break down how to track your mental mistakes like a chart and how to build a thermometer that warns you before it gets too hot. You cannot fix what you cannot see. Mapping changes that. Let's begin. Now, spotting triggers and mistakes in real time. You cannot fix what you cannot see. That is why the first step in Jared Tendler's system is awareness. Specifically, the ability to recognize your patterns as they happen, not after the trade, not after the damage, but in the moment. Tendler calls this process mapping. You are building a real-time blueprint of how your worst trades unfold. Step by step. Emotion by emotion. It starts with identifying your triggers. What events, thoughts, or feelings tend to happen right before things go wrong? For some, it is a missed trade. For others, it is watching a big move without being in it. It could be a comment on Twitter. It could be a feeling in your chest, a tension in your jaw, a shift in your breathing. These are not random. They are repeatable. And if you learn to see them early, you have a chance to intervene before the mistake happens. The mapping process is simple, but powerful. You write out what happens before, during, and after a mental mistake. You include the trigger, the thoughts that followed, the emotions, the physical sensations, and the final behavior. Let's say you tend to overtrade after a small win. Your map might look like this. Trigger. You exit with a small profit. Thought, that was easy. I can do it again. Emotion. Excitement. Body. Fast heartbeat. Restless energy. Behavior. Re-enter too fast. No setup. Bigger size. Once you write that down, you now have a pattern. You can start to recognize it while it is forming, not just when it is too late. Tendler emphasizes this point. Mental mistakes do not come out of nowhere. They follow a script. Your job is to learn the script, then rewire it. This is where awareness becomes power, because most traders only reflect after they blow up. They say things like, "I don't know what happened." But that is never true. Something happened. They just were not trained to notice it. Mapping changes that. You start to catch the shift as it begins. The way a pilot senses engine noise before a failure. The way a boxer reads the twitch before a punch. You become faster at noticing when your mind is slipping. And eventually, you can disrupt the slide before it turns into a mistake. This process is not about judgment. It is about information. You are collecting emotional data the same way you would collect market data. Trigger, thought, emotion, body, behavior. Track it. Name it. Own it. This is the start of real control. Not forced discipline, but informed action. In the next part, we will take this mapping even deeper. You will learn how to build a 1 to 10 scale that tracks how far into the mistake you are, like a thermometer for your mind, so you can measure when it is time to act. Awareness is the first edge. Let's sharpen it. Now, building a 1 to 10 emotional thermometer. Awareness is powerful, but awareness without structure is fragile. You may notice a bad pattern forming, but unless you know how intense it is, you won't know when to act. That is why Jared Tendler introduces a simple but effective tool, the emotional thermometer. This tool helps you measure your mental and emotional state on a scale from 1 to 10. It turns your internal chaos into numbers. And those numbers become your early warning system. Let's start at the beginning. Think of the emotional thermometer like a pressure gauge. It helps you understand not just what is happening inside you, but how intense it is. A 1 on the scale means you are completely calm. Your body is relaxed. Your breathing is smooth. Your thoughts are clear. You are fully aligned with your plan. A 3 means mild agitation. Nothing major, but maybe you are checking charts a little too often. You feel just a touch of pressure or excitement. A 5 is the middle. It is the point where things can go either way. You are still in control, but you are also vulnerable. One wrong trigger could send you upward. A 7 means your emotions are rising fast. You might start rationalizing weak trades. You are less patient. You are forcing things. A 9 means full emotional activation. You are no longer trading your system. You are trading how you feel. And if you don't stop, a 10 is coming. A 10 is tilt. You are completely compromised. You are clicking buttons in panic or rage. You are chasing. You are doubling size. You are burning capital. You are burning trust in yourself. At this level, there is no logic, only reaction. Tendler's goal is not to stop you from ever reaching 10. His goal is to help you catch yourself at 6 or 7, so you don't spiral. That is where the emotional thermometer comes in. It gives you checkpoints, and if you use it properly, you will catch the breakdown before it breaks you. So how do you build your thermometer? Start by identifying one emotion that frequently sabotages your trading. It could be greed. It could be fear. It could be frustration or boredom. Now think about how that emotion builds over time. Describe what it feels like at a 1, at a 3, at a 5, at a 7, and at a 10. Let's walk through an example. Say your main problem is greed. You often overtrade after a winning trade. You want more. You feel unstoppable. That emotion takes over. Here is what the thermometer might look like. At 1, you take a win. You log it. You move on. No urge to continue. At 3, you feel excited. You think about how today could be a big day. At 5, you say, one more trade won't hurt. You look for a setup but feel rushed. At 7, you force a trade that doesn't meet your rules. You ignore your checklist. At 10, you triple your size and take a random scalp. When it fails, you revenge trade. Once you write this out, you now have a live system. You can check in before a trade. You can check in after a trade. You can check in at any moment during the session. Where am I on the scale right now? Is it a 2? A 5? An 8? That number is not just information. It is a decision tool. At a 5, you might take a breath. At a 6, you reduce size. At an 8, you pause for 5 minutes. At a 9, you step away completely. Tendler teaches that this is how you reclaim control, not through willpower, but through real-time awareness and real-time action. The emotional thermometer is not a journal entry. It is a process. It becomes part of your routine, the same way you check news, the same way you set risk parameters. You check your mind, because no matter how strong your strategy is, you are still the one executing it. And if your internal state is unstable, your results will be too. Some traders even build multiple thermometers. One for fear, one for tilt, one for confidence. Each has its own curve. Each has its own signature. The key is to customize it. Make it personal. The more detailed it is, the more useful it becomes. And there is another layer. Over time, you will see how your average number changes. You will notice that what used to be an 8 is now a 5. What used to push you into tilt now only triggers a breath. This is real progress. It is not flashy, but it is measurable. And that matters, because you are not trying to be perfect. You are trying to be consistent. And consistency is built on control. Not emotional control in the moment, but structural control over your process. The thermometer is one of the simplest tools Tendler offers, but it is also one of the most powerful. It turns your emotions into data. It gives you the power to see the storm coming before it hits. In the next part, we will look at a real case study. You will see how a trader used mapping and the thermometer to break a years-long pattern of self-sabotage. The system works, but only if you use it. Let's see it in action. Now, case study mapping greed in action. Concepts are powerful, but real change happens when you see those concepts applied. In this part, we break down a real-world example from Jared Tendler's work. A trader stuck in a destructive cycle of greed, and how the mapping process, combined with the emotional thermometer, helped him break it. Let's call him Chris. Chris was a breakout trader. He had a solid technical system. He knew how to scan, plan, and manage risk. But every time he hit a winning streak, his performance would crash. After 3 green trades, he would suddenly start sizing up, chasing entries, skipping confirmations. He would get aggressive, confident, then reckless, and within a few hours, he would lose all the gains he had made. This was not a one-time issue. It had been happening for months. At first, Chris thought he just needed more discipline. He tried forcing himself to stop trading after 2 wins. That didn't work. He tried blocking charts. Still didn't work. The problem wasn't the chart. It was his internal script. So Jared had him map it. Chris started documenting the exact sequence that happened after a winning trade. Here's what his pattern looked like. Trigger, green trade. Thought, that was easy. Today might be huge. Emotion, excitement, slight rush. Body cue, faster breathing, slight tension in hands. Behavior, re-enters fast. No full setup, ignores checklist. When Chris saw this pattern written out, it became clear. He wasn't reacting to the market. He was reacting to his own belief that success had to be maximized immediately. It wasn't greed for money. It was fear of missing out on momentum. He didn't want to leave money on the table. So he started taking money off the table by forcing trades that weren't there. Jared then introduced the thermometer. Chris built a scale just for this specific pattern. At 1, calm after a win, grateful, logs trade. At 3, thinking about doubling the day. At 5, reviewing other charts, looking for quick entries. At 7, entering trades without checklist. At 10, panic, over-leveraged, revenge trading after loss. This was eye-opening. Chris had been hitting 7s and 8s daily, without even knowing it. Now, with the scale in hand, he could feel when the numbers were rising. He began checking in every hour, and when he hit a 5, he would pause, walk away for 5 minutes, take a breath, review his rules. He also created a short injecting logic script, a simple phrase to interrupt the pattern. He wrote, "A good trade is enough. I don't need to force more. Consistency wins, not streaks." At first, it felt mechanical, forced, but within weeks, it started working. He went from giving back profits twice a week to once a month, then rarely. His curve flattened, his confidence grew, and most importantly, he no longer feared his own emotions. That's the real win. This is what mapping does. It brings the hidden pattern to the surface. It lets you see what's driving the mistake before it becomes destructive. And when paired with the thermometer, it becomes a living system, a real-time GPS for your mind. You no longer just hope you stay calm. You track when you're not. You no longer just try to trade well. You build the conditions that make good trading possible. Chris's story is not unique. Many traders sabotage when they are winning, not because they are greedy, but because they do not understand what success triggers in them. This is why emotional work matters, because it explains the parts of trading that charts never will. In the next segment, we move into the next phase of the system, finding the root. What beliefs and biases drive your emotional responses? What are you really reacting to? Mapping shows you what happens, but finding the root tells you why. And once you know the why, you can finally start to rewire it. Now, why you stay stuck. Learning loops and misdiagnosis. Most traders are not stuck because they are lazy. They are stuck because they are solving the wrong problem over and over again. They think they have a discipline issue, or a fear issue, or a consistency issue. So they try harder. They push more. They double down on routines, rules, and motivation. And nothing changes because they are not treating the root cause. They are treating symptoms. Jared Tendler calls this the misdiagnosis loop, and it is one of the biggest reasons traders fail to evolve. Here is how it works. You make a mistake. Let's say you chase a breakout. You get stopped out. You feel regret. You tell yourself you need to be more patient. You write it in your journal. You promise to wait next time. But you didn't ask the deeper question. Why did I chase in the first place? What triggered the decision? What belief powered that urge? If you skip that step, you'll repeat the mistake. Maybe not tomorrow, but next week, next month, it will return. This is how traders stay stuck for years. They keep making small surface-level adjustments without ever digging into the emotional engine underneath. Tendler says real change only happens when you uncover the belief driving the emotion. That belief is usually hidden. It operates in the background like code. You can't see it, but it runs every decision. Let's break it down. You fear missing out. That's the emotion. But what's behind it? Maybe it's the belief that opportunity is rare, that you have to catch every move, or you'll fall behind. Or maybe you fear being wrong, so you hesitate. You overanalyze. But under that fear is a belief that mistakes define my worth. Those are root-level thoughts. And until you identify and challenge them, they will control you. This is where most traders go wrong. They try to suppress emotion or control behavior, but they never update the belief that creates the behavior. That's why the learning loop never closes. Tendler introduces a mental model called the inchworm, which we explored earlier. It reminds us that you cannot just chase your A game. You have to lift your C game too. And most C game mistakes are rooted in emotional beliefs formed years before you ever opened a trading platform. Beliefs about money, about success, about control, about yourself. Trading exposes all of it. It doesn't create emotional problems. It reveals them. This is why strategy-only education doesn't work. It's like upgrading the software while ignoring the corrupted hard drive. Real progress comes from the mental hand history, which we'll explore in the next part. But for now, remember this. You are not stuck because you're incapable. You are stuck because you haven't found the root. Stop trying harder. Start going deeper. Because surface-level effort, no matter how intense, can never fix a problem you don't fully understand. In the next segment, we explore the nature of that root, how beliefs are formed, why they stay hidden, and how to start bringing them into the light. That's how change begins. Not with willpower, but with insight. Let's keep going. Now, the inchworm concept: fixing C game, not chasing A game. Every trader wants to perform at their peak, but peak performance is not where the battle is won. In trading, the real edge comes from reducing the damage when you are not at your best. That's what Jared Tendler teaches with the inchworm concept. It is one of the most important models in the book, and it flips the way you think about progress. Picture an inchworm. When it moves, the front of its body stretches forward. Then the back catches up. It repeats this movement over and over. That is growth. In trading, your front end is your A game. It's when you are focused, calm, and executing well. The best version of yourself. Your back end is your C game. It's when you hesitate, tilt, chase, or freeze. The worst version of yourself. Most traders only try to stretch the front. They want more flow, more winning trades, more high-performance moments. They think that if they push hard enough, they can stay in the A game forever. But that's not how real growth works. If the back of the worm never moves, you become stretched thin. Your peak gets higher, but your baseline stays broken. This creates huge emotional swings. You go from elite focus to disaster mode in a single session, and every mistake feels like a collapse. Tendler says this clearly. Real progress is about closing the gap, not just expanding the peak, but lifting the floor. That means looking at your C game directly, not avoiding it, not judging it, but studying it like a chart, like a data set. Your job is to bring the C game closer to the B game, and eventually raise the B game closer to the A game. That's how the inchworm moves. That's how real consistency is built. So how do you identify your C game? You look at your worst moments. What thoughts do you have when things fall apart? What emotions come up? What mistakes repeat? You write them down, not just the behavior, but the state of mind that produced it. Let's say your C game includes revenge trading. You log exactly what happens when it shows up. You lost a trade. You felt angry. You thought, I'll make it back right now. You skipped your rules. You took a random trade. You lost again. That's a full C game cycle. Now contrast it with your A game. Maybe your A game includes clear plans, tight execution, and acceptance of losses. The goal is not to pretend your C game doesn't exist. The goal is to shrink how often it appears, to shrink how long it lasts, and to shrink the damage it causes. That is where progress lives. This model also removes ego from the equation. You stop needing to be perfect. You stop measuring yourself by single trades. You zoom out. You see yourself as a range, a moving system, not a fixed identity. And that mindset change is powerful because it takes the pressure off. You stop chasing the high and you start building the base. This is why some traders burn out. They stretch for the peak, but ignore the weak foundation. Eventually, the stretch breaks and they collapse. Tendler's inchworm teaches you to build differently, more stable, more honest, more sustainable. This also ties directly into the emotional thermometer from the previous segment. When you know where you are on the scale, you can tell whether you are in A, B, or C mode. And that awareness gives you the chance to course correct before it's too late. It's not about never having a bad day. It's about learning to recognize your internal drop and respond with structure. You may still hit a C game moment, but instead of spiraling, you stabilize. That's what the inchworm is all about. Slow, steady compression of the gap between your best and your worst. That's how consistency is built. That's how confidence is earned. Not through streaks, but through control. In the next segment, we dive into the core technique that helps you uncover the emotional beliefs driving your C game. It's called the mental hand history, and it's where the real rewiring begins. Now, mental hand history. 5. Step internal X. Ray. By now, you've learned how to spot your patterns. You've seen how to measure intensity, and you understand why your worst trading days matter more than your best. But here's the next step. You have to find out what's actually driving those patterns. That means going deep, below the surface, into the emotional software that shapes your decisions. This is where Jared Tendler introduces one of the most powerful tools in the entire book. It's called the mental hand history, and it works like a 5-step X-ray for your psychology. Just like you review a trade setup after a loss, you can review a mental mistake and find the exact belief that caused it. This is the process. Step 1. What happened? Be specific. Describe the moment where things broke down. For example, I took a random trade after missing the real breakout. It didn't fit my setup. I knew I shouldn't take it, but I did anyway. You are not judging. You are just documenting the moment of failure, with as much detail as possible. Step 2. What were you thinking and feeling? Now go internal. What thoughts came up? What emotions showed up? You might write, I felt angry that I missed the move. I thought, I can't just sit here and watch. I need to make something happen. I felt anxious, impatient, and a little ashamed. This step matters. You are identifying the emotional fingerprint of the moment. The more clearly you name it, the more useful it becomes. Step 3. Why did it make sense to think and feel that way? Here's where it gets deeper. Most traders skip this part. They stop at, I messed up. But that's not enough. You need to understand why your brain responded the way it did. Maybe you write, it made sense because I hate missing out. When I see others winning, I feel like I'm falling behind, like I'm being left out of the game. I also feel pressure to prove I'm good enough to catch moves like that. This is honest. This is useful. Now you're not just describing the emotion. You're seeing the belief behind it. Step 4. What is flawed or missing in that logic? Now challenge it. Is the belief true? Is it complete? You might write, I'm not actually behind. I have a full system. There will always be another setup. Missing one trade doesn't define me, and forcing one just to catch up usually makes things worse. This is where you start to shift. You are training your brain to see reality more clearly, not just react emotionally. Step 5. What is the correction? Now you write the antidote. A clear, simple statement you can use when this pattern shows up again. This is called an injecting logic statement. It's the sentence you will say to yourself in real time to interrupt the spiral. For example, missing a trade doesn't mean I'm behind. It means I'm disciplined. The market always gives another chance. I only take trades that meet my setup. That's the end of the mental hand history. But it's only the beginning of rewiring. You don't just write this once. You review it. You rehearse it. You read it before each session. And you fire it when the pattern starts to appear. Over time, your brain starts to adopt the correction. The old belief weakens. The new one gets stronger. Eventually, the mistake fades. Not because you forced it, but because it stopped making sense. That's what Tendler calls resolution. When the emotion loses power, because the logic has taken its place. This tool is simple, but it works. You can use it for fear, for greed, for tilt, for confidence issues, for overtrading. It is the X-ray machine for your mental game. And here's the best part. You don't have to do it perfectly. You just have to do it honestly. Because honesty is the beginning of control. In the next segment, we step into the emotional battlefield. Greed, fear, tilt. You've seen the tools. Now you'll see them in action. Now, greed, overconfidence, FOMO, oversizing. Greed is not what you think it is. It is not just the desire to make more money. It is often the fear of not making enough, or the fear of missing out, or the belief that you need to win now, or the opportunity is gone forever. In trading, greed doesn't wear a golden crown. It hides in overconfidence. It hides in sizing up after a win. It hides in FOMO when you watch the market move without you. Greed is sneaky, and it is one of the most destructive mental patterns traders face. Jared Tendler breaks it down clearly. He says greed is not just an emotion. It is a cluster of psychological triggers that often come from hidden beliefs. Let's look at a typical pattern. You take 2 winning trades. You feel good, maybe too good. Your confidence shifts from grounded to inflated. You start thinking, I'm in the zone. I can double my day. This is easy. Then your risk changes. You size up. You loosen your entry criteria. You chase. And suddenly, your edge is gone. Not because the setup failed, but because your mindset changed. This is the greed cycle. And unless you map it and interrupt it, you will repeat it again and again. Let's take a real trader example. Roderick is a day trader. His biggest problem was stringing together good trades and then blowing up by overtrading. He would win 2 or 3 in a row, then size up dramatically. One loss would erase the whole day. Here's what his greed map looked like. Trigger, 2 consecutive winners. Thoughts, this could be a record day. I'm seeing everything clearly. Emotions, excitement, confidence, urgency. Body cues, increased energy, faster breathing, tension in the chest. Behavior, takes larger size, loosens entry rules, starts chasing setups. Roderick didn't think he was being greedy. He thought he was being aggressive. He thought it was a strength. But Tendler showed him the difference. Aggression is controlled and calculated. Greed is impulsive and emotional. Once Roderick accepted that, he could begin building a system to manage it. He created a thermometer specifically for post-win overconfidence. At level 1, he was calm and grounded after a win. At level 3, he felt slightly charged up. At 5, he was scanning aggressively. At 7, he was convincing himself to break rules. At 10, he was all in on a random breakout with max size. Roderick learned to check this scale before every new trade. If he was above 5, he paused. He read his injecting logic statement. Wins don't mean invincibility. They mean I followed my system. My edge is execution, not emotion. He also began capping the number of trades per session and setting maximum allowed size after a win. The result? His big losses stopped. His equity curve smoothed. And more importantly, he trusted himself again. Greed was no longer something he fought. It was something he tracked. That's the key. Greed is not a failure. It is a signal. But if you don't see it coming, it will wreck your decision-making. Tendler's framework helps you break this pattern at the root, not by trying to feel less excited, but by creating rules and reminders that anchor you to logic. Because the truth is, greed is just excitement without structure. And once you give it structure, it loses its power. In the next part, we'll move into the second core emotion, fear. Fear of losing. Fear of missing out. Fear of being wrong. It shows up differently, but the solution is the same. Track it. Map it. Break it. Now, fear and losing, mistakes and uncertainty. Fear is not weakness. It is a signal. But most traders treat fear like a flaw. They try to hide it, bury it, or power through it. And that's why it stays. Jared Tendler shows us something different. Fear is not the enemy. Misunderstanding it is. Let's break it down. There are many types of fear in trading. Fear of losing money. Fear of making a mistake. Fear of being wrong. Fear of missing the move. Fear of pulling the trigger. Fear of regret. Each one feels a little different, but they all do the same thing. They interfere with execution. You hesitate. You second guess. You freeze. Or you avoid trading altogether. Fear shuts down your edge. Not because the trade was bad, but because the emotion blocked you from taking it. So what's really happening? Tendler teaches that fear often hides deeper beliefs. It's not just fear of loss. It's fear of what that loss means. You don't just fear losing money. You fear that losing means you're not good enough, or that you're falling behind, or that you'll never make it as a trader. That belief creates pressure. Pressure creates tension, and tension breaks execution. Let's look at a real example. Vishal is a swing trader. He knows his setups, but he often hesitates to enter. He watches perfect trades go by, and when he finally clicks, he's too late. Here's what his fear pattern looked like. Trigger. Setup appears. Meets all criteria. Thoughts. What if this is a fake out? What if I lose again? Emotions. Doubt. Anxiety. Tightness in chest. Body cues. Shoulders tense. Breathing shallow. Behavior. Delays entry. Misses move. Feels regret. Vishal wasn't afraid of the setup. He was afraid of being wrong again. He had tied his self-worth to trade outcomes. Every loss felt personal. Every mistake felt like failure. Tendler had him use the mental hand history. What happened? He froze. What was he thinking? He feared another loss. Why did that make sense? Because he believed losing means he's failing. What was flawed? Losing is part of trading. Correction? Taking a valid setup is success. Win or lose. Vishal also built a thermometer for fear. At 1, calm, focused, trusts the setup. At 3, slight doubt, rechecks chart too much. At 5, hesitates, clicks in late. At 7, skips trade entirely, watches in frustration. At 10, stops trading, shuts down platform. He learned to check that scale before execution. And when he felt himself rising past 5, He paused. He read his injecting logic script. The goal is execution, not outcome. I don't control the result. I control the process. Slowly, the fear began to fade. Not because he stopped being afraid, but because he stopped believing the fear was true. That's the difference. Fear will always exist in the market, but it doesn't have to control you. You can feel fear and still execute with clarity. If you've trained your response, Tendler teaches that fear is not something to conquer. It is something to understand. Because once you know what you're really afraid of, you can challenge it. And once you challenge it, you can choose differently. Fear doesn't go away with confidence. It goes away with proof. And every time you act in spite of fear, you collect proof. That's how you build courage. That's how you build freedom. In the next segment, we look at the final destructive emotion: tilt, frustration, revenge, entitlement. This is where control is often lost completely. And that's why it needs structure. Let's keep going. Now, tilt, anger, revenge, and entitlement. Tilt is where many traders lose everything. It is emotional hijacking. It is the moment when logic shuts down and your worst instincts take control. Tilt is more than anger. It is frustration. It is injustice. It is entitlement. It is the feeling that the market owes you something or that you must get it back now. Jared Tendler treats tilt with surgical precision. He doesn't call it a mindset problem. He calls it a performance emergency. And just like a risk blowout, it must be contained. Let's begin with the core truth. Tilt is not caused by the market. It is caused by your interpretation of what the market did. You lose a trade. You don't just see it as a data point. You see it as unfair, as wrong, as personal. That belief triggers a rush of emotion. Your nervous system floods. Your breathing shortens. Your thoughts collapse into one idea: I have to make it back. At this point, you are not trading anymore. You are reacting. You are emotionally intoxicated. And like any intoxication, you can't think clearly until it wears off. But in trading, you don't have time to wait. You must interrupt it early. And that means spotting it as it builds. Let's look at a real trader, Alex. Alex was a scalper. Precise, fast. He was excellent when calm. But when he took 2 losses in a row, something changed. His charts became blurry. He started seeing trades that weren't there. He would size up suddenly, double down, and blow out in minutes. Here's how his tilt map looked. Trigger: 2 quick losses. Thoughts: this is rigged. I'll show this market. Emotions: anger, injustice, frustration. Body cues: heat in face, tight jaw, restless fingers. Behavior: instant re-entry, double size, no setup. Alex wasn't losing because of poor strategy. He was losing because of emotional momentum. He was trying to win the argument, not the trade. This is classic tilt. So what did Tendler do? First, he had Alex name the pattern. He called it the hammer mode. Giving it a name helped externalize it. It wasn't him. It was a mode he could track. Next, Alex built a thermometer. At level 1, calm, accepting losses as normal. At 3, slight annoyance, thinking about how the loss happened. At 5, begins to speed up, scans faster, stops taking notes. At 7, emotionally charged, looking to get back fast. At 10, full tilt, hammer mode, slamming buttons, no logic. Alex committed to one rule. If he reached 7 or higher, he walked away for 15 minutes. No exceptions. No trades. Just reset. He also created an injecting logic statement. Losing is part of trading. No single trade defines my edge. I don't chase the market. I follow my system. At first, it felt useless. But with repetition, his brain began to catch the shift before it spiked. He learned to read the signs, the tension in his hands, the heat in his face, the angry inner dialogue. And he learned to pause, not suppress. Pause. Interrupt the cycle. Over time, Alex stopped blowing up. Not because he never tilted, but because he didn't let tilt turn into action. That's the lesson. Tilt is not the emotion. Tilt is what happens when you act on the emotion, without a system in place. Tendler shows that tilt often comes from unspoken beliefs. Beliefs like, I deserve to win today. The market screwed me. I need to get it back now. If I don't fix this, I'm a failure. These thoughts sound dramatic, but in a heightened emotional state, they feel true. And that's why you must challenge them when you're not tilted. You must prepare your logic before emotion blinds you. This is the same process we've used before. Map the pattern. Build a thermometer. Write the injecting logic. Practice the reset. You are creating a system that protects you from yourself. Because tilt is not about one bad day. It is about long-term damage. Blown accounts, broken confidence, quitting altogether. And that's avoidable. If you track it, name it, interrupt it, and replace it. Tilt is not a character flaw. It is a pattern. And like any pattern, you can break it. In the next segment, we shift from the emotional battleground into the solution space. Confidence, discipline, real-time correction. You've seen the damage emotions can do. Now let's build the structure that holds you together when the pressure hits hardest. Let's move forward. And now, stable confidence versus ego-driven confidence. Confidence is everything in trading, but most traders don't know what real confidence looks like. They confuse it with winning, with momentum, with the high of a green streak, but Jared Tendler makes it clear. That kind of confidence is fragile, because when confidence is based on results, it rises fast and collapses just as fast. It becomes ego, and ego can't survive a drawdown. What you need is something different. You need stable confidence. A version of confidence that doesn't depend on your last trade. A mindset built on skill, preparation, and self-trust. One that can hold even in the middle of a losing streak. Let's define the difference. Ego-driven confidence sounds like, I'm crushing it today. I knew that trade would work. I'm on fire right now. It feels great until the market flips. Then it becomes, I can't believe I missed that. I suck today. I've completely lost it. The highs are high, but the lows are dangerous. You're riding a psychological roller coaster, and your decisions swing with your P&L. Stable confidence sounds different. I've seen this setup before. I followed my plan. I'm okay with this loss. It was clean. There's no rush, no crash, just steady awareness of your process. Tendler says, the key to building stable confidence is collecting evidence, not emotion, not hype. Proof. Proof of what? Proof that you know what you're doing, that you've executed well under pressure, that you've followed your rules even when it was hard. He has traders create something called the stable confidence list. It's a running record of personal wins, not in terms of profit, but in terms of process. Here's what that list might include. I stuck to my stop loss even when it hurt. I waited for confirmation instead of chasing. I skipped a trade that didn't fit my system. I walked away when I felt tilted. I scaled out exactly as planned. These are the moments that build real confidence. because they show you who you are under stress. And that's the only kind of confidence that matters. Not how you trade on your best days, but how you hold yourself on your worst. Here's a story. Max is a position trader. For months, he relied on performance-based confidence. When he was green, he was aggressive. When he was red, he would spiral. His account looked strong, but mentally, he was unstable. He didn't trust himself. And that showed up in inconsistent decisions. Tendler had him build a stable confidence list. At first, Max resisted. He thought, I don't need that. I know what I'm good at. But when he actually wrote it out, he realized something. He had no real record of his strengths. He remembered the losses, but he forgot the wins that weren't flashy. After a few weeks, things started to shift. On a tough day, he pulled up the list, read through it, reminded himself of what he already knew how to do. That reset his internal state. It gave him perspective. It brought him back to logic. Max still had losing trades, but he didn't unravel anymore because his confidence wasn't writing the outcome. It was rooted in evidence. That's what you need. Your confidence must be portable. It must go with you through red days, through volatility, through doubt. And that only happens when you've trained your brain to remember who you are, not just what the market gave you. So what do you do now? Start your list. Write 3 examples of decisions you're proud of. Not because they made money, but because they showed discipline. Add to it over time. Make it a part of your review process. And most importantly, read it when you start to slip, when you feel uncertain, when you're down and questioning yourself. That's when you need it most. In the next segment, we move into the foundation that keeps confidence steady. Discipline. Not willpower. Not punishment. A system. And a strategy to correct yourself in real time before the damage is done. Let's continue. Now, building iron discipline with injecting logic. Discipline is not about being strict. It's not about forcing yourself to follow rules through willpower. That kind of discipline breaks under pressure, especially in trading. Jared Tendler teaches a different model, one that doesn't rely on motivation or control, but on clarity, structure, and real-time correction, because the real enemy of discipline is not emotion. It's momentum. Once a mental mistake starts, it builds fast. A single hesitation becomes self-doubt. One bad trade becomes tilt. A small break in your rules becomes a downward spiral. Discipline breaks because there was no tool in place to interrupt the momentum. That tool is called injecting logic. It's a short, specific phrase you write in advance and fire in real time when you feel the emotion begin. It's not positive thinking. It's not, I've got this. It's logic grounded in your own process and beliefs. Let's walk through how it works. You already know how to map your pattern. You already have a thermometer that tells you when you're rising. Now, when that internal temperature hits a critical level, you respond with a logic injection. For example, let's say you tend to size up after a win. You feel overconfident. You want to press your advantage. But this has led to big drawdowns before. Here's how you write the injecting logic. 1. Identify the faulty belief. If I don't size up now, I'm wasting the opportunity. 2. Challenge it. Sizing up without a valid setup is not opportunity, it's risk. 3. Replace it. Edge comes from consistency, not aggression. The final injecting logic statement might be, I don't need to size up. My edge is in discipline, not momentum. Stick to the system. Now here's the key. You must practice saying this before you need it. You rehearse it daily. You write it on a card. You read it before sessions. So when the emotion appears, you're not scrambling. You're ready. Think of it like a pilot checklist. They don't wait until the engine fails to decide what to do. They train for it, over and over. Injecting logic becomes your emotional checklist. It helps you stabilize quickly and return to clarity. Let's go back to Max, the trader we met earlier. His issue wasn't just confidence. It was discipline collapse when things got emotional. He would follow his system for days. Then one afternoon, he'd feel FOMO, skip his rules, and undo all the gains. Tendler helped him write a logic script. Missing a trade is not a mistake. Breaking my rules is. My job is not to catch every move. It's to execute cleanly. Max read that every day. He repeated it before trading. Eventually, it became a trigger response. He felt the fear rise and the logic kicked in. That broke the old loop. This is how discipline is really built. Not by being perfect. Not by forcing yourself. But by preparing for emotional pressure, the same way you prepare for technical setups. Here's how you can start. Step 1. Identify the most common moment your discipline breaks. Step 2. Use a mental hand history to find the root belief. Step 3. Write your injecting logic 3 lines or less. Step 4. Read it daily. Say it out loud. Make it automatic. Step 5. Fire it the moment your thermometer passes level 5. The more you repeat this, the faster your brain learns the new path. You are rewiring your response in real time. And that's the core of Tendler's philosophy. You don't fix the mental game with effort. You fix it with systems. Systems you can use when things get hard. Not after. But in the moment, in the next and final segment, we'll look at how to troubleshoot deeper issues. What happens when progress stalls? When burnout hits? When your life outside trading bleeds into your execution? Because even the strongest system needs support when things get complex. Let's finish strong. Now, troubleshooting plateaus, burnout, and life bleed. You've built the system. You've mapped your patterns. You've found the roots. You've practiced real-time correction. But what happens when it still doesn't work? What happens when you hit a wall? When nothing is technically wrong, but something feels off? Welcome to the final battlefield. Plateaus, burnout, and life bleed. These are not technical issues. They don't show up in your charts. They don't break your strategy. They break you. Let's start with plateaus. Part 1. Plateaus. When progress stalls. You've been improving. Then suddenly, everything flattens. No more breakthroughs. No more deep insights. You feel stuck. And because you're a trader, you don't just feel stuck. You blame yourself. Maybe you think you're not working hard enough. Maybe you start switching strategies. Maybe you look for new tools, new routines, new stimulation. But Jared Tendler explains this differently. A plateau isn't failure. It's integration. When you learn something new, your brain needs time to absorb it, to organize it, to make it automatic. A plateau is the mind catching up. But if you don't recognize that, you'll sabotage the process. You'll force growth instead of letting it settle. And that impatience leads to confusion, and confusion leads to breakdown. So what do? You zoom out. You reground in your system. You simplify. You review what's already working. And you wait. Growth doesn't always look like motion. Sometimes it looks like stillness. Tendler encourages one powerful practice during a plateau. Focus on execution quality. If you're not growing emotionally, focus on mechanical precision. Rebuild trust in your process. Prove to yourself daily that you can still execute cleanly, even when your mind feels stale. That discipline becomes the fuel for the next surge upward. Part 2. Burnout. When the system collapses. Burnout is different. It's not a plateau. It's not stillness. It's erosion. Your energy is low. Your interest is fading. You feel irritable, disconnected, numb. You start making mistakes you thought you had fixed. You doubt everything. And worst of all, you stop caring. This is a warning sign. Burnout usually doesn't come from trading itself. It comes from how you relate to trading. Here are common causes. Trading is your only source of identity. You're putting in effort, but not seeing results. You're trying to control outcomes that aren't controllable. You're trading under pressure to make money fast. You're isolating. You're ignoring your physical needs. You're absorbing stress from other parts of your life and hoping trading will be the escape. It won't be. Tendler says burnout is the body's way of slowing you down before something worse happens. You cannot push through burnout. You must shift. That might mean reducing screen time, taking a break, shifting to review-only days, cutting down risk, talking to someone, trading coach, peer, therapist. This doesn't mean you're weak. It means you're human, and no system is sustainable. If the human running it is collapsing, burnout is real, and it costs more than money. If you're burned out, do this today. Admit it. Simplify your system. Reduce your expectations. Focus on sleep, nutrition, and connection. Plan a return not based on motivation, but on stability. That's how you protect your edge. Long term. Part 3. Life bleed. When everything else comes with you. You sit at your desk. You open your platform. You check your watch list. But your mind is somewhere else. Maybe it's an argument from last night. Maybe it's a financial pressure. Maybe it's something heavy: grief, fear, uncertainty. And now, all of that is leaking into your execution. This is called life bleed. Tendler talks about this in his final chapters. He says trading doesn't exist in a vacuum. It amplifies whatever you're already feeling. If you're overwhelmed in life, you will feel it more in the market. If you're disconnected, you'll hesitate. If you're angry, you'll overtrade. The chart becomes a mirror. And if your life is unstable, your trades will be too. So what do? You build emotional boundaries. That means developing habits that separate your life from your trading state. Start the day with a reset routine. Journaling, breath work, movement, something that clears the emotional clutter. Before you trade, ask, am I bringing anything into this session that doesn't belong? If the answer is yes, name it, acknowledge it. And if it's too loud, don't trade. That's strength. Boundaries are not about control. They're about clarity. They let you show up fully or step back consciously. Here's another tactic. End each session with a shutdown ritual. Review your trades. Write what went well. Note anything emotional that showed up. Then close the loop. This prevents bleed from continuing into tomorrow. You are training your mind, not just to execute well, but to separate cleanly. That's professional mental hygiene. Final reflection. You are the system. Here's what you've built through this process. A way to map emotional patterns. A thermometer to track intensity. A method to find and rewrite root beliefs. Real-time logic to interrupt spirals. A structure for confidence, discipline, and recovery. But here's the deeper truth. You are the system. Your ability to observe, to adapt, to reset. And that's what turns knowledge into power. This video was never about eliminating emotion. It was about reclaiming control. Not control over the market, but control over your mind inside the market. Jared Tendler gave you the blueprint. Now it's your turn to implement it. Not all at once, but one piece at a time. Start with one pattern. Track one reaction. Write one injecting logic statement. Build one moment of awareness. Then another. Then another. Over time, your trading will change. But more importantly, you will change. Because this is not just about charts. It's about how you handle pressure, how you recover from failure, how you show up for yourself. That's what the mental game is. And now, you are equipped to play it for real. Let's trade like professionals.